can they start with $500 or $1,000 or $200? Like, what is the optimal?
I like to tell people they start with no money because I
Okay,
just said you should
just
open
do
a
the trading
practice
account, right?
account
Practice
and
account.
do the
Okay.
right. And the funny part is most people won't even take that step, and that step is free.
All right, guys, welcome to another episode of the Practical Wealth Show. So I'm excited. Today we're going to talk about, well, we always talk about money, but we're going to talk about what we're going to call the path to $1 million, from stock trading. So I have Mr. Jason Brown of the Brown Report. And let me tell you a little bit about Jason. We're excited to have him. He's a seasoned stock market coach, options trader, the founder of the Brown Report, known for a strategic approach to options trading. Jason teaches thousands how to achieve financial freedom after turning $10,000 student loan into six figures. Who needs to know how to do that? He developed power trading to help others maximize a small investment account, capitalize on big wins while managing risk. Jason shares the expertise through courses, YouTube, Power Trade University, and you can learn more. We'll put this in the show notes at thebrownreport.com. Jason Brown, welcome to the Practical Wealth Show.
Curtis, thanks for having me, man. Excited to be here.
Yes. So we were talking offline. I was at a networking event yesterday, and I jokingly say I'm kind of anti-Wall Street financial advisor, but I say that tongue in cheek because most people just throw stuff and manage accounts and don't think about it, right? And so I'm not anti-Wall Street. I'm anti not knowing what the hell you're doing. Okay. And so that's what I don't like because, people are just trained to cut their brain off and give your money to some fund manager you never met and hope it all works out for the best. And I don't think a hope is a good strategy. Right. So, Jason, am I crazy or is that, it's all right. You can tell me. It's I can
I
take it.
always joke in the stock market and say, hope and prayer is not a strategy, right?
Okay.
People hope, they pray, they call on God, they do the rain dance, but that is not a strategy for investing in the stock market or taking control of your financial future.
Taking
Although it's
control.
good to have God on your side
Oh, for sure.
and a little hope.
A little, I mean, hope is what's that movie? The Star Wars movie is like hope. Revolutions are built on hope. Okay, but financial planning is not. All right, so I like certainty and guarantees, but I like, we always teach, Jason, is that investing is really more about becoming something than about buying something. So becoming, like, what I just from looking at your bio, you help people become good traders, good analysts, good, that type of stuff. And what happens is becoming is work. Become transformation is hard because it's not. I mean, it's compared to what, but it's work, and so you got to want to work. Would that be an accurate statement?
Yeah, absolutely. I think when it comes to money and investing, there's a couple things I want to point out because I
Hmm.
know they sent you my other team sent you my old bio. I wrote a book called 5 Year Millionaire, and it's about
Hmm.
how to make $1 million in the stock market in 5 years, which was my own personal story. But I started investing back when I was 21, and I took that $10,000 student loan and grew it to over six figures. Uh, for those who don't know me, I had dropped out of school, scaled the account up to $300,000. And by the time I was 25, 26, I risked $250,000 trying to make $500,000. I lost it all. I was flat broke and I had to rebuild from the ground up, which meant getting a job, living below my means, taking the extra, putting it back in the stock market and rebuilding and regrowing my account. Reason I bring that up is because what you said is it's about becoming someone. And I like to tell people, I'm a millionaire today, even if I lost all of my money, because
Yes.
the money is not what makes me a millionaire. It's the mindset, it's the thought
Right.
process, it's how I think about money, it's how I see opportunity.
Right.
That is what makes me a millionaire mentally, psychologically. And so that is something that you have to become. And I did my own podcast. I did a show. It was either called making $1 million versus becoming a millionaire. And that was the crux of that discussion, which is
Mm-hmm.
Making $1 million is very different than becoming a millionaire. You could hit the lottery and make $1 million. That
Right.
doesn't make you a millionaire. You don't think like one. You don't manage money like one. You don't see opportunity like one. And that is probably the more important part of what you were saying about it's about who you need to become in
Yes.
order to invest in the stock market, trade, do a money manager, whatever category
Right.
you want to put yourself in. It's about becoming a person that is a good steward of money and knows how to manage it and see opportunity and calculate risk.
I love that. I'm so glad you said that. I mean, that's it. So tell them that, and I like to talk to people that went from, because you don't learn nothing from success, right? You got to screw up
No.
and then build it, have the fortitude to grow, to not sit in a fetal position. Oh, woe is me, I lost it all, and get back out and fight again to get back up to the top. So I really love that. And what talk about that, because people always want to get to the tactics, and they want to skip the mindset. And I try to get people to understand the mindset is the most important part. Then you get to because if you're not, is be then do then have, and if you aren't willing to be, you would just want to get to the do, but you got to be first. Talk about that, and then tell them, where I have a few questions for you as we go along.
Yeah, and I've been in like personal development all my life. When I
Yeah,
was 18, I joined a network marketing company, or maybe people call it multi-level. And if you've ever
yeah,
been in a multi-level marketing company, they're all about reading books. They're all
yeah.
about
I
trying to
look, I
train you.
started at 20. Same
Yeah.
thing. In college, as junior in college.
Okay.
So yeah.
Yeah,
So
so we was reading books like Think and Grow Rich, Rich Dad, Poor Dad, The Alchemist, all
yeah,
these books. And what I really I bring that up because sometimes when you aren't in personal development and you say something, Curtis, like be do have, most people like, oh, that's cute. I heard these quotes before, all these fancy little sayings. But once you actually unpack it, what I have found as a seasoned stock market coach and a finance expert helping, thousands of people, I used to just give them what to do. I would skip the
yeah,
beat and go straight to
yeah,
what to
yeah.
do. Here's what people have to understand. I can tell you 100% after being in this industry for over 20 years, the biggest emails and text messages I used to get over time was, I know you said what to do or you show how it worked, but I'm afraid. What if I lose it all? What if I push the wrong button?
Mhm.
What happens if I'm wrong? What happens if I'm not right? How do I recover? If I lose this money, what do I tell my husband? What do I tell my wife? And so I realized like they know what to do, but we skipped over who they have to be.
Right.
And if they don't understand who they have to be, even if they know what to do, they are afraid to take action on it.
Yes.
And
Yes.
so you have to be a person who says, I take calculated risks and I understand that if this doesn't go right, everything doesn't work out in life. You have to first psychologically understand that
Right.
to have the confidence to push the button and buy your first stock, buy your first option. You have to be a person that says, what am I going to tell my husband or wife? I'm going to tell him or her, I tried to do the best for our family and it didn't work out, right? I'm not going to feel guilty for that because everything don't work out. But my intent was that I tried to build wealth for our family. That is a mindset shift versus I'm going to be embarrassed that I made the wrong decision or I pushed the
Right.
button, bought a stock and I lost money. I
Right.
can't let them find out. That's two totally different mindsets versus I'm proud that I pushed the button. I'm proud I took a calculator risk. Most people don't even do anything. They sit on the sidelines and talk about it. I got in the game.
Right.
That's a
Right.
different mindset. And you got to get that mindset of who you have to be in order to act on what you have to do.
Right.
Otherwise, you'll be the person saying, I know what to do, but I just couldn't do it.
Yeah.
Couldn't take the risk, couldn't buy a stock, couldn't buy an option, couldn't go see the financial planning guy because I was too embarrassed for him to look
Right.
at my account versus I'm not embarrassed for him to look at my account. I can't wait till he looks at my account because this is the last day I'm going to be embarrassed about my account.
Right.
That's a different mindset,
Yeah. Yes.
totally
Yes.
different
Yes.
mindset.
That's so good. So I'll get into some tactics. I know y'all waiting to hear that. So your book outlines the 5 Year Millionaire, how to turn a few $1,000s into $1 million in 5 years. Can you walk through a few? I want to get the book. I gotta get the book, but some basic roadmaps or pillars of this strategy.
Yeah, I want to make sure your audience or listeners or viewers, if they're watching this live on YouTube or something, I want them to understand that when people hear I can take a few $1,000s and turn into $1,000,000. Your BS radar goes off. So I want to
Yeah.
address that because
Yeah.
I get it.
Yeah.
I get it. When
Yeah.
I didn't have the type of money or success that I have, I used to be like, is that for real? Is that true? And then the second question I used to have was, even if it is true, can it happen for regular people like me?
Right.
And
Right.
so I had to get over that and investigate and realize it can happen for regular people. You have to understand how I came up with the 5 year millionaire formula, which I'll talk about in a second. But it goes
Hmm.
back to when I was 18 years old. I had worked retail ever since I was 15, 16, working at McDonald's, working at Best Buy, working at Mervyn's of California, which was a retail store. I had always worked weekends. And so I'm 18, I'm a senior in high school. I missed all the basketball games, all the fun stuff, because I always worked nights and weekends in retail. And
Hmm.
so I'm 18 slash going on 19. I graduate and I'm like, I got to figure out how to not spend the rest of my life working weekends in retail. It's making $8 an hour, $64 on a Saturday for an 8 hour shift, $50 to take home. I had $500 left of from what went bad from my first investment. I had $500 left. And I was like, if I could just make 10% off this $500, that would be $50. And that would be one Saturday that I could take off. One
Wow.
Saturday I
Yeah.
could take off.
Yeah. Yeah.
I eventually got really good at making the 10% of the $50. I actually built out a spreadsheet and a formula that I said, well, what if I had $4,000? And basically, if you can start with $4,000 and learn how to make 10% a month over 60 months, which is 5 years, you would actually end up with $1.2 million. If you didn't pull any money out, you let the amount that you can invest compound over 5 years. And so that's when I discovered, like, whoa, how do I get $4,000 in the account? Because I was already doing the 10% with
Right.
$500. I was
Right.
making $50 here, $50 there. So I was like, how do I get more money into the machine? And so when I got $4,000 in the account, like I said, well, I didn't get 4,000. I saw the formula and I was like, I could have $1.2 million in 5 years. That's when I started doing everything I could to get more money into the machine. I was like, well, what if I had $10,000? So I could start off with a little bit more. And so
Right.
I started trying to figure out how to get more money in the machine. So that is why the book is called 5 Year Millionaire. It's my journey of discovering that I can earn 10%. Because that was the other question. I was like, well, how do I earn 10%? I was trading stocks, which was Sprint PCS. The stock was $5 a share. I had bought 100 shares and I was just trying to make 50 cents. Well, what happened was after a while, there were other stocks that were in a certain pattern that I recognized, but I couldn't afford them. So I was like, how do I trade those other stocks? And that's what led me to learn about calls and put options, where I was like, I can control the Googles, the Amazons, the Teslas of the world for a fraction of the cost because I didn't have a lot of money in my account. And that was what took me to millionaire status, just learning that I could control the higher price, higher quality stocks using options and get a better return, which would supercharge that 10%. Some that months I would get 20%, 30%. And that sent me on that trajectory of the 5 year millionaire plan that I'm talking about.
Yeah. See, now you got me excited because I like that. Like I hadn't had. I've always fascinated me. I just didn't have the. I won't say I hadn't made the time to learn how to do it. But when you say something like that, I was like, I get that. I could do that. So and it seems
Everybody
like,
can. They just got to
yeah,
learn how.
you got to learn how. It's the how, and well, you got to want to be better off, and then you got to be willing to commit to the how. But so I think you emphasize learning stock patterns and options trade you early on. If somebody's brand new to investing, what would you say is the first skill or concept they should master?
They have to learn how to read a stock chart and understand the best time to buy and sell, right? Because everything that we do afterwards with an option is only based on us finding the right stock, the low risk time to buy, the best time to sell, and taking a calculated risk. So everything begins and ends with finding the right stock and
Mhm.
then determining the best time to buy and sell. Now, people might hear this, and I used to listen to stuff like this, so I really like to, try to give explanations for stuff because then you go, well,
Mhm.
what does finding the right stock mean? Finding the right stock, number one, means a company that's not going out of business. So it's
Okay.
not the marijuana stock that you heard about yesterday. It's not the cryptocurrency craze that just popped up. It's not uh, some random Reddit forum you were in and you heard about this new stock and you don't know nothing about it. I like to tell people start with the S&P 500. Why? They already did the homework for you. You can't become one of the top 500 stocks if someone didn't review thousands of stocks and allowed them into the S&P 500. So just
Right.
start with the S&P 500 to the top 500 rated US companies. Just that research alone they've done to accept these companies into the S&P 500, right? Inside of the S&P 500, you'll find companies like Walmart.
Right.
Walmart's not going out of business
Right.
anytime soon. Amazon not going out of business anytime
So
soon.
would you say, sorry to cut you off, is that your 500 good businesses? Because people think stocks, but the stock is represents share of ownership in good businesses, and you want to find a good business. Even though I think trading works differently. So does it matter?
Well, you want to find first 500 good companies. That's a good starting spot. Now we
Okay.
could take this in a different direction. You could find 500 bad companies because you could buy put options and make money from them falling.
Okay.
So
I love this.
but that
Yeah,
might
we get
blow people's minds. They're like, well,
right,
what do you mean, right? So
right,
first, let's just stick with what most
right.
people know,
Okay.
which
Yeah.
is most people
Okay.
know buy low, sell high. That's
Yes.
what most people know.
Okay.
So if you're going to buy low and sell high, you want to do it of good companies, companies that are not going to go out of business. They're going to continue to innovate and deliver good products and services. Once we find a good company, the second step, and like I'm saying, finding a good company could start with just starting with the top 500 because most people haven't been taught how to do deep research on the company. So give yourself a shortcut. Start with the top 500. That's in the S&P 500. Now
Okay.
that you've picked a stock in the S&P 500, I like to tell people there are bad times to buy a good company. And I'll say that again. There are bad times to buy a good company. You could have bought Facebook when it was going through the Cambridge Analytical scandal and all the Russian ads, and it was a good company, but that was a bad time to buy them. The stock got cut in half. Stock fell from actually got cut more than half. I think it fell from 300 down to like 90 or $60. Now since then it's rallied and went up to $600-700, but that was a bad time to buy a good company. And so you have to be able to read stock charts and understand what's going on with the news and the economy to say, yes, it's a good company. Is this the best time to be buying it?
Hmm.
Once you can determine what's the best time to buy it, which also takes into account what's the low risk time to buy it, meaning Walmart, for example, or you look at Apple. Apple was about $270. Apple has since, with trade war, tariffs, all this stuff, I think it's fallen down to like $210. So you
Okay.
got a stock that's almost 20 to 25% plus off its highs. 30%, almost a 30% discount. I'm rounding numbers here.
Right.
25 to
Right.
30% discount. Okay. So you got to ask yourself, do you think Apple's going to go 50% off? People still use iPhones. They still download apps. They still use the cloud. They still use the service. So you're starting to formulate a thought process that says it's already at a discount. How much lower can it really go? And it's not the game of can I buy it at the absolute bottom? The game is I didn't buy it at the absolute top because I don't know
Okay.
how high it can go. But I do know that at a certain point, Apple has value and it's not going to go to zero.
Right.
So starting to understand what's the low risk time to buy the Apples, the Amazons, the Walmarts. And then, and only then, do we come in and say, how do I get a better return on this low risk, high reward, good quality company? Now is the good time to buy. How do I get a better return on that? We then say, let me look at buying a call option or some type of option strategy versus buying the stock. So that's the process that you go through. You have to first look at a good company with a good business. Then you have to look at the stock chart and say, is this the low risk time, high reward, best time to buy it? And then how do I get a better return is the final question that you're asking. How do I get a better return and minimize my risk?
Okay. All right. So I'm gonna let you just roll with that. Keep going. What's the
No,
next
that's
thing?
I mean, that's
That's
it, right? So
it.
that's where you place the option trade and you take a calculated risk. And it's either gonna work
All
out
right.
or
So
it's not.
for let's say I'm dumb. I am dumb. What is the option trade? What's the option? I think we
Okay,
should
great.
like I want to because I don't want to assume everybody knows what that is. Call
Most people
options,
don't
put
know what it
options.
is. So great
Yeah.
question. That's
Yeah.
a great question. So here's how I like to explain what an option is. Let's think about a house. Most people have bought a house before, or hopefully they plan on buying a house and they understand the house buying process. Let's just say you're going to buy a house, Curtis, and you're looking in this neighborhood. You see this house, they're asking $200,000 for it. You
Hmm.
say, you know what? Love the house. I want to buy it. I want to make you an offer for $200,000. They say, great, Curtis. you got to leave us a earnest money deposit. You say, how much? Just 1%. Put down $2,000 just to show us that you're serious. You give them $2,000. They say, great. You got 30 days to get an inspection, appraisal, all that you need to make sure the house is what it is. You say, great. So you got this $200,000 house. You gave them
Mhm.
$2,000 to hold it for 30 days while you go get an inspection appraisal. You get an inspection appraisal. It comes back and they say, Curtis, good news. This house appraises for $250,000, right? It's a great buy. The house is good, good foundation, no problems. You're like, woohoo, house already has some equity in it. Let's just say Kelly. Kelly says, oh, I really want this house. And you're like, oh, I'm sorry, Kelly. I have it under contract. I just got an inspection. But I tell you what, you and your family want to live here. I'm open to getting another house. So here's what I can do for you. I had the house appraised. It's going for $250,000. I have this contract that I can buy the house for $200,000. I will sell you my contract for $50,000, and you can go buy the house for $200,000, which means all in, Kelly, you will pay the $250,000 that it's worth. It appraised that. Kelly says, sounds good to me. As long as I don't pay anything more than $250,000. She's happy. She buys the contract from me. She goes buys the house. But think about what just happened for you. The house is the asset or the stock that's $200,000 in value.
Right.
You did not have to come up with $200,000. You only had to come up with $2,000 to control the house for 30 days. And because the value went up in 30 days after the appraisal, you was able to sell that contract for $50,000, which means you made $48,000 net profit. That is what options trading is. It is saying, I like Apple, I like Amazon. I don't want to buy 1,000 shares at $200,000, but I will control 1,000 shares for the next 30 days for $2,000 on the belief that I did research. I looked at the chart and I believe in the next 30 days, the stock is going to go up and this piece of paper, this contract is going to be worth more than the $2,000 that I paid for it. Maybe it'll be worth $3,000, $4,000, and you can get a 50 to 100% return on your money without ever having to come up with $200,000 to own that house, or in this case, the stock. That is options trading.
I love that. You about to get a new student because I get that. You know, you about to get and so now and so also on the reverse end, that means the worst thing that could happen is that you
You
could lose
can't
your
you can't
$8,000.
lose more than $2,000.
$2,000.
Yes, which I'm glad you get that because people will say, I heard trading options is risky. And I'm like, that's how I know you don't understand how options works. Because I come in with my risk already defined. I can't
Right,
even lose more than
right,
$2,000.
right,
If I got $200,000 in the wrong company, if that company goes out of business, I could lose the whole 200,000.
right. I
But I
love that.
come in knowing that the maximum I could lose is $2,000, which is so perfect, right? And you said something that gets me excited. You said, I get that. You might have a new student. That is what I am in this for, to see people's light bulbs go off to say,
Yes.
how come nobody ever taught this to me like this? How come no one ever explained it like that? That is why I have a business and a job, because
Yeah,
my job is to be like, especially for us black people. Now, if you
yeah.
white listen to this or Asian,
We still love you.
we love you too,
You're right.
but we have not been taught this stuff.
Yeah,
We have been
yeah.
historically excluded from this information, whether that's on purpose or because nobody in our family was in the stock market. So we didn't have an uncle or a
And it's
dad to go
it's
to.
that, and then one of the things I tell people, Jason, is that here are the 4 rules. Like most people are, I call it the financial industrial complex. That are in that. There's 4 rules that govern all financial advice. Because any financial, like the financial industries are like product manufacturers, right? The banks, insurance companies, Wall Street, and here are the 4 rules that govern all their advice. They want your money. They want it on a regular basis. They want to keep as long as possible, and they want to give it back never, right? And so it's I call it the accumulation theory, right? So they're using you, but with they're doing what you're talking about with your
With
money,
your money, with your money. Exactly.
because we don't know the game, right? And it's hard to win a game you don't know the rules.
It's against their interest to even teach you the game.
Yeah,
Because then why would you give them your money?
I'll
You
give them
would
your
do it
money.
for
Exactly.
yourself, right? And they
Exactly.
need your money so that they can do it.
And that's both our goals, right? Is like you got to know the game so that you can win, so you can take control of, because if you understand I love that, because I think you got to understand a little bit of economics. You got to get engaged in some critical thinking. And it doesn't matter. One time I saw this trader, like this is like 2008. He says traders were excited when things were going down because if you understand it, when things get worse, you can make more money if you just understand the game. So it doesn't matter if your candidate won or didn't win in the
It doesn't
last
matter.
election. It doesn't matter. People get all hyped up about this and that, and it's irrelevant. I'm here to make money. I'm here to create wealth for my family. So it's not really important because if I'm financially free, I can do whatever the hell I want. you know.
Absolutely.
And
Now,
so anyway,
now from a
keep going.
political
Talking good.
standpoint, or that's totally different. But from a
Different,
money making standpoint, doesn't matter who's in office if you got the right strategies. We're not here to talk about red, left, right,
right?
blue. If
Because this
if you
this
work
is
for the
a money
government, your
show,
program got
right?
cut
This
or
is a
not.
money show. I don't care about none of
Yeah,
that stuff, right?
that's a different
Yeah, it's a different
conversation.
conversation. Yeah,
I'm talking from a money perspective. I don't care if the Democrats or the Republicans is in the House. I want the strategies to make money no matter what the market is doing.
I love that because I tell people, look, a good financial plan, and we try to engage in Jason holistic planning. So we say your plan has to work no matter what. So like in our relationship, Curtis is I would call you offense, right? And with it, but you have a defensive take, but I'm the defensive coordinator. So I'm making sure you're managing cash flow. I want to make sure you have an emergency fund. I want to make sure you're properly insured. You got a will, you got a trust, you got, even I tell people like, correct me if I'm wrong. So car insurance, for example, and let's say you have a $500 or $1,000 deductible, that's like a put.
That's totally a put option. Absolutely.
Now, so tell
Yeah.
them what a put option is. I'm at my edge of my knowledge, so now I'm punting it over to you.
No, you. So what's funny is when I do my seminars, I use the house as an example for call
Okay.
option because that's
Uh-huh.
something everybody does.
Yep.
I use car insurance as an example for put option because
Oh, cool.
I usually have the room. I shouldn't give this away, but if anybody ever comes to my seminar, I always say, raise your hand if you've ever bought a put option. Nobody raises their hand. I said, raise your hand if you've ever bought car insurance. Everybody's hands go up.
Mhm. Mhm.
And I said, if you've ever bought car insurance, you bought a put option. Everyone's like, what? What do you mean? Here's how a put option works. You have $100,000 car. You pay $500 a month for car insurance. If you smash that car into the wall, God forbid, but you walk away from it, car's total is worth zero. You can call up your insurance company and put that car to them, even though it's worth zero. They have to give you $100,000 for it, even though it's worth zero. That is what a put option does. You can use it to protect your $100,000 portfolio.
Right.
So if you got a stock portfolio of $100,000 or $50,000, any amount, you could buy a put option for 30 days the same way you buy insurance. So if you like, I don't know what's going on with trade war, I don't know what's going on with tariffs, I want to protect my account for the next 30 days. You could have bought a put option and protected your trading or your investment account from getting into that car accident. And if the stock in your portfolio went down, which most people does, unfortunately, what most people say is, I don't even want to look at my retirement account. I don't even want to think about it. I lost so much. And it breaks my heart because I'm like, then
Yes.
that means your financial advisor ain't telling you about put options because you technically could have kept your account whole. Now this is not a shot against financial advisors. That's not their job,
That's not your
though. Their
job.
job isn't trading options. Their job that's your job to actively protect or trade your account. Their job is like, hey, dollar cost average down, it's going to come back over time. And that is a theory. That is a game plan. There's nothing wrong with
Theory
that game
is a
plan.
is a. I'm glad you said theory. That's why I call it the accumulation theory.
Yeah,
Okay. And
it's one
so we're
theory.
talking about velocity of
Yeah.
money, right? And so that's another theory. That's a theory rich people use, right? So, they believe in velocity, cash flow, leverage, risk management, and then they even store their liquidity in like permanent insurance. See, so here's what I found, Jason. Once I learned the difference between buy and hold, dollar cost average, get out of debt, buy term investor difference, and modern portfolio theory. And then if you look at corporate finance, they do what you're talking about. But what I found is you could do that corporate finance strategy, it works in personal finance and it's safer and you have more control if you're willing to learn a little bit of vocabulary. Like money has its own language. So when we say puts and calls, you just learned a little bit of that's like ABCD. You learn the vocabulary. Money has its own language.
Yeah. I mean, if you think about it, we could also call a put option insurance. How come insurance
Yeah.
companies don't say, "Hey, do you want to buy a put option on your car?"
Yeah. That's how I heard it. As
I mean,
insurance. Yeah, yeah, exactly.
but they technically could say that, whether it's life
Yeah.
insurance, home
Yeah.
insurance, they could say, "Do you want to buy a put option on your house? Do you want to buy a put option on your car? Do
I
you want to
just
buy a
try
put
that. I
option
tell
on
life
your life?"
insurance. I said, look, I'm gonna try to put a put option on your life. And
Yeah.
you know, and
But
so for
it's
30
the
cents, I can give
language.
you $1.
So people are doing it every day, every month
Yeah.
when they cut the
Yeah.
insurance check, but they don't understand the language. It's the same thing in the stock market. So then when they hear put option, they think risky. I don't know
Right.
what that is. Stay away from it. And I also think that's just super important that language is so important. I'm so
Yeah.
careful with my words, and I'm so
Yeah.
fascinated when someone uses a word I don't understand
Yeah.
because that word could mean the same thing as something you're already doing, but because you don't understand it, you believe you're excluded from getting wealth that way.
Yeah. Yeah.
Just because you don't understand that, oh, he just said buy insurance. That's it. I bought insurance before. Now all of a sudden you're like, oh, that's easy. I could
Right.
trade some stocks,
Right.
right? I could,
That's
I
what
could,
you
I
gotta
could
do.
do
You gotta
this.
take the people have I heard it from Dan Sullivan. People suffer from a ceiling. They have a low ceiling of complexity, right? And so it seems complex. So you're beating your head against the ceiling, which causes frustration. But hopefully, I think between both of our shows, we're trying to raise that ceiling for you. And as your knowledge goes up, your anxiety comes down. As your knowledge goes
Absolutely.
up, your risk comes down. And that's why you have
Absolutely.
to engage in personal development so that you can get better. And so stuff that bothered you 2 years ago rolls off you like water off a duck's back.
Absolutely. And you have to want to be better. You have to put aside your ego. I don't want to go look stupid. It's like I'll go and be like, I'm stupid. I'm
Right,
ignorant to how this works. Can you
right,
please explain that again? Because I want to know. I don't want to remain ignorant,
right,
remain stupid. See, we give stupid and ignorant a bad name. It just means you're unaware. You can
right,
use whatever words you want. Stupid,
right,
ignorant,
right,
unaware, oblivious. There's a ton of words in the English dictionary. It's the meaning that you assign to it. I'm just unaware and I would like to be aware. What does that mean? How does that work?
right. And
But
that's
some
why
people
we're
assign,
here. Right.
yeah.
Exactly. So let me ask you this. You mentioned the 3 C's of success: coaching, courses, and community. Why are these, in your opinion, so critical for investors? And how do they personally accelerate your journey or their journey?
Yeah. So the 3 C's courses, coaching, community, what I found in just going through trying to help people, I used to take people straight to coaching because people will say,
Mhm.
well, how did you make the money back? How did you find those stocks? How did you eventually become a millionaire? And I was like, oh, I did this, I did that. And then people were like, can I follow you? Can I watch you do it? Right. And so I would, I used to share my trades on YouTube. And then
Right,
I ended
right,
up building like a private community where people could pay to watch me find these trades and make these investments. But then I found out they would be like, what's a call? What's a put? Why'd you buy that strike price? Why that expiration date? Because you could buy an option that expires up to 3 years out.
wow,
People think day trading when they hear a trade or options trading. You could buy an option that don't expire to 3 years from now. So
wow,
then people will be like, why'd you pick a 12-month option, 6 month? Why'd you pick a 2 year? What? So what I found was I couldn't do what I like to do, which is find the trades. I kept stopping and explaining.
right,
So
right,
I realized you gotta have the courses to even understand. Once you understand, coaching is the part where how do I apply this in the real world?
yeah,
Because the market is forever changing. How did this work during 9/11? How did this work during the '08 market crash? How did this work during COVID-19? Now, how did this work during tariffs? The market changes. So you need real time, real life coaching to say, how does this work right here, right now, today, under these circumstances? And then you need a community. When things go wrong, you press the wrong button, you up and you don't know how to get out. You need to be able to have a safe community where you're like, how does this work? Oh, I'm in a trade, it's going against me. How do I stop the bleeding? You need a community. I made a bunch of money, but I don't want to tell my family about it because they go ask to borrow some. You need an outlet
Right,
of
right,
where you can go of like-minded people to talk about this stuff. The problem most people have is, number one, they don't have the courses, which means inevitably they don't have the education.
right.
So then they go on YouTube or Reddit or Facebook or Instagram and they try to mimic somebody coaching or mimic what they're doing without the right coaching. Then they lose money, right? And then third, they don't have anybody to ask. So they go ask their broke friend, what do you think about investing in stock
Right,
options? And
right,
they
right,
broke
right.
friend with no coaching, with no courses, no education. It's like, I heard that's a scam, or them people just want to take your money. That stuff don't work. So, but you're in the wrong community,
Right,
right?
right.
If you're around a community of investors and traders, we're like, oh, well, this is how it works. That's a put option. Here's how you protect yourself. Here's a call option. It's kind of like a house. When you put the earnest, like, right, when you in that community, you like, oh
Yeah.
no, they giving me game. When you in this community, they like, just go to work, put your head down, and everything will be all
Max out
right.
your 401k and keep it moving. Right. I
But
love that.
but that's the community you're in. So until
Yeah.
you switch and get around the right community for where you're trying to go, you always go get
You know what I always hated?
conflicting insights.
Yeah, you know I hate. I used to see this was a few years ago where this guy was putting. He was just it, or people would just, especially when it reaches MLM, to me it's over, right? But but it's like, listen, we just gonna follow such and such trades, right? And so to me, you're not learning anything. So
You're
what's
not
the
learning.
point? You're not learning anything because you need to be able to think, and you don't have a thought process to deal with stuff. You just blindly following, somebody else. And, what if they went on vacation? What you going to do? Or what if they decide to shut it down? You haven't learned, because you don't have a coach, course, or community, how to think and how to be because I try to share with people, listen, 2 + 2 is 4. This is not that deep, right? And you can be you are your own best investment advisor, I think, if you will learn. See, I take the viewpoint that, Jason, people are smart, right? And if you'll tell them the truth and give them, coach them a little bit, they can figure it out. I don't think it's this black hole mystery that, you can't learn. And let me talk about. I want to talk about diversification, right? And so I heard you talk about non-traditional diversification strategies, and I want you to tell us what that looks like versus, and how does it protect wealth differently than traditional diversification, which what's his name? Buffett says diversification for people that don't know what they're doing. Right. So,
Yeah,
and
I mean,
how do you feel
it,
about that?
it's true. It is true. I mean, if you are really good at something, you focus in on that. If I mean, just think about it. If we'll just take any sport. If your kid is really good at soccer, and you mean like they have a shot, they really are good at soccer.
Hmm.
Do you say, well, just in case soccer don't work out, I'm also put you in basketball, baseball, football, tennis. Like you would never diverse. You would be like, you might say, yes, get an education, have something to fall back on, but you
Hmm.
would never put them in baseball, football, tennis, basketball if they are truly know what they're doing and focus and good at soccer. You would double down. You get them a soccer coach. You'd be taking them to soccer practice. You'd be buying them soccer videos to watch, right?
Right.
Because you focus. It's the same thing with investing. If you got a strategy that's working, you don't say, let me stop what's working and let me go do a whole bunch of other different things because some some person told me I should be diversified. Dave Ramsey or somebody. No knock against Dave Ramsey, but you got to understand, you know, I'm gonna just call it what it is. Dave Ramsey, Susie Orman, they talking to poor people.
Yes. Come on now.
I'm just gonna call it what it is. They are talking to poor people. And you might be like, well, Jason Brown, I like them. You calling me poor? Listen, don't get emotional about it. Don't take it personal. What I am talking about is they are talking to people who can't even control themselves for spending the credit card. They like cut up the credit card and spend cash. I think that's the dumbest thing ever. Why
For
wouldn't I
sure.
swipe my credit card, get the free reward points, then turn around and pay off my credit card? That's the smart, rich thing to do. But they're talking to poor people with poor habits, poor spending, no self control, that we can't even get you to this rich tactic because you're so poor that we just got to save you from yourself. So don't even use
Right.
a credit card, carry an envelope, and pay cash for everything. They talking to poor people.
And for them, that's great advice.
That is great advice if you have no self-control.
Yes, but once you get to the point, or at least you get yourself even, now if you want to be rich or financially free, there you got to follow a different playbook.
You got to follow a different playbook. And so my point is that playbook is more laser focused versus
Yeah,
diversified, just
yeah,
putting money in all kind of random places because you're scared and don't know what you're doing.
right.
So I like to talk about diversification a little bit different. I like to say you need to diversify your strategies. You need to learn
Mm,
call options, put options. You need to learn how to own an ETF. You need to know how to protect your account from falling. Those are the diversification strategies that I'm talking about that are still within the vertical alignment of investing in the stock market. I'm not going to say diversify from a standpoint of like, well, go buy some houses, go start a business, go get a couple CDs at the bank, like
right,
go put
right,
some money under your mattress. That is not building wealth,
right,
right? I'm
right.
talking when I use diversify, I'm saying diversify from the old mindset of buy low, sell high. And that's the only weapon that you have against poverty. It's just buy low, sell high. I'm trying to get you to diversify your tools to say, I don't care if it's buy low, sell high. I don't care if the market's going down. I don't care if it's going sideways. I have a strategy, a diversification toolbox of strategies to make money no matter what the stock market is doing. And so that's what I mean when I talk about diversification.
I love that. And you got to learn that. That's powerful. What if they're listening to this? I got all right. I'm trying to like focus. You got my mind is racing. Like what I want to talk about. What what for people that feel overwhelmed by the idea. So I'm gonna ask this question. I'm gonna put piggyback on the second question, because the second question is, what did I miss that you want to make sure you say? Right. And that will help them. And this might even be the same question. If people are listening and they feel overwhelmed by the idea of trading and investing, what actions would you recommend they can take to start shifting towards financial independence? Let's start with that question.
I I like to tell people it's not as complicated as you think. And I started this and I'll end it with this. You got to change your mindset. And I
Hmm.
know people sometimes when you hear that, you like, give me a nugget. I'm giving you a nugget. Change your mindset. Now let's go tactical. How do I change my mindset, Jason Brown? Look back over your life and think about anything that you started new. I'm talking about riding a bike, you were stressed out, anxious, overwhelmed. You could actually fall off, hurt yourself.
Right.
Driving a car, you were stressed out, anxious, overwhelmed. What did you do? You took driver's training, you went and took a written test, you drove in a car with your parents or somebody, a licensed driver, you went to an empty parking lot. Think about college. Overwhelming. What did you do? You start researching universities. You start researching what you wanted to study. You might have went and visited a campus. You did a
Right.
campus site visit.
Right.
Maybe you went to a community college for 2 years first. Then you committed 4 years to learning. Nobody goes to college and says, if I'm not a doctor in a year, this just didn't work out for me. If I don't have my degree in 6 months, this was a waste of time. You go in having done research, visited the campus, researched the industry, committing 4 years, and even going in debt before you ever expect to see a return.
Right.
So, what is my message? Why should the stock market be any different? You have to look at it and say, let's start doing some research. What's a good stock program? What's a bad stock program? The same way you research college campuses.
Right.
Then you have to do what? Listen to a podcast, watch a free YouTube video. That's like visiting the college campus. In my world, that's downloading my free PDF, right? Do I like how he's teaching, talking? Does it make sense? You are testing out that college, that university, that teacher to see, does it make sense? Do I think they can help me? And then you take the next step. You say, okay, I'm going to commit. I want to commit to learning this. I'm gonna give myself 6 months, a year. I ideally would love for you to give yourself 4 years, the same way you gave college 4 years. But then you have to make a commitment, and then you need to get what I like to tell people in a safe environment. The same way you learn to ride that bike with a helmet, some knee pads, or you learn to drive that car in an empty parking lot where you couldn't hit anything. Same thing with the stock market. I tell people open your first trading account with where there are several companies like Webull. I don't know if Robinhood has it, but Webull, Charles Schwab's Thinkorswim, they have a button where you switch the platform over to paper money or virtual trading, or it's basically a practice account that allows you to be like that kid with the training wheels and the helmet on and the knee pads. You get to practice. You get to practice driving the car in that empty parking lot without worrying about getting a ticket, without hitting somebody, without anything other than I'm practicing the safe environment. You can do the same thing in the stock market. And then once you get comfortable, which I tell people, you want to make at least 10 practice trades. And once you're right 7 out of 10 times, or you're net profitable, then you're ready for real money. And
Hmm.
so you're not afraid of something that you've practiced, you've experienced, and
Right.
you've gotten good at.
Right. Right. I love that. What can I start with? How I hate this question, but what is the can they start with $500 or $1,000 or $200? Like what is the
I
optimal?
like to tell people they start with no money because I
Okay.
just said you should
Just
open
do
a
the trading
practice
account. Right.
account
Practice
and
account.
do the
Okay.
right. And the funny part is most people won't even take that step, and that step is free. It's
Mm-hmm.
go
Mm-hmm.
only thing it costs you is your address and your social security number. Same when you open a bank account, you open a brokerage account. Most people won't even take that step. It's free. It's
Yeah.
free to open those accounts and start practicing. So that's my answer. Anytime someone
Yeah.
says, "How much should I start with?"
That's a
Free,
great answer. That is
no
great.
money.
And so it's easy, as Jim Rohn says, easy. Getting financially free is easy. It's easy to do, but it's also easy not to do.
Easy not to do.
And so we gave you an easy step. This is you. Jason. You understand? My mind is racing because I see where this fits into our planning process. Like boom, like a glove. I said, like I have this vision of okay, all right, we have to talk offline of how to do this. But tell them as we close. And I so appreciate your time today. What's the best way for them to follow you, reach out to you, and start to learn to get in this game? What would you have them do?
Yeah. The best way is just to go to the brownreport.com. That's either the Brown Report or brownreport.com. I own both domains, just
Mhm.
thebrownreport.com. You can follow me all over social from there. But more importantly, we have what's called a stock market starter pack and a stock option starter pack. These are two free, like 15-page PDFs where I break down stocks, the best accounts to open, how to get that free account, and how to utilize that. And then we also break down costs, put options. We walk you through examples of how that works. That would be the best next step for somebody to take. Grab those free resources. And then obviously all my social media handles and stuff are on that same page, all at thebrownreport.com.
Jason, but within the next 20 minutes, I'm gonna have all that. Uh, because I love that you one of the things that we talk about our framework, we call the Money for Life Blueprint, is earn it, bank it, borrow it, spend it, repay it. So we teach infinite banking, but the earn it part you just hit right of you got to outside of work, you got to think how to create more revenue, right? And so this is a good way to learn that you can teach your kids. One of the things I love about Rich Dad Poor Dad book is the whole title. People miss that is Rich Dad Poor Dad, what wealthy people teach their kids that the
Hmm.
poor middle class don't. And so if you don't know, you can't teach it, right? And so this is a transferable knowledge that you could give up. Now I got a 30-year-old. I think she could learn how to do this, right? And so we could be playing. I get her if I can. I'll get her a cat. We can learn how to do it together. And
But see, what you're talking about there is what people totally miss. People be like, I want to create generational wealth. And most people mistakenly attribute generational wealth to passing money down.
yeah,
But very rarely do we think about passing generational knowledge down.
right,
Because can you imagine if your kid said, my dad didn't leave me a lot of money, but he taught me how to make money in the stock market. And then they had kids and they said, my parents not only left me a lot of money, they also left me the knowledge of how to grow it in the stock market. And they kids said, my great great
right,
granddaddy didn't leave a lot of money. He left a lot of knowledge, which my grandma took that knowledge and grew it in the stock market. And my mother took it and parlayed it. And now she passed not just the money down, the knowledge with now that's the
Yeah,
generational
that's
wealth
it.
part.
We call it in our system leaving a legacy of wealth and wisdom, the wisdom to go along
I
with that.
love it. I
And
love it.
because the wisdom, because if you leave the money, I've had people like, so I do insurance. I've delivered death claims of darn near $1 million, and the people was broke within 2.5 years because they ghosted me once they got the money, and then just did all kinds of dumb stuff. And I said,
Yeah.
look, you even $500,000, you're not rich. I said, at best, you got a good head start. But you know what I mean? Because if you put like the safe withdrawal rate in equities is 4%, you had $1 million. That's $40,000 a year, and so that's like what, $3,000-4,000 a month. You're not rich,
You're
you
not rich.
know. And but if you will invest in your knowledge, you could now grow that, and then grow, as Jim Rohn would say, you got to grow into the money before you blow it. Right? So
They say
that is awesome.
the first generation makes it, the second generation saves it, the third generation blows it.
Yep.
Something like
Yep.
that, right?
What does it say? Shirt sleeves to shirt sleeves in 3 generations, right? And all right, listen, I could go. We go on another riff. I'm gonna let you go, my brother. Listen, guys, reach out to Jason Brown, thebrownreport.com, and he gave y'all some nuggets. I would say, like, he gave you a lot of ride or diners, so you need to listen to this more than once. You need to share it with somebody that needs to hear this stuff. Your kids, if you're older, and you want to get this stuff out, and y'all need to follow him and learn how to do this, because I know I am. Jason, thanks again.
Curtis, thanks for having me.
Yes, sir.